Welcome to this video on the Trump trade. In this video, we'll explore how the financial markets may respond to the economic and political actions associated with the potential Donald Trump presidency. We'll look into the various sectors and asset classes to understand the broader impact. So let's dive into the anticipated shifts in market behavior. Please remember that nothing in this video should be interpreted as financial advice. You should always do your own research when it comes to investing. Let's begin with stock markets. Under the Trump trade scenario, US stocks would be expected to rally. During Trump's previous term, US stocks, especially in technology, financials, industrials, and energy, experienced significant gains. A similar rally would be expected amongst domestic equities in anticipation of policy-driven growth. Investors may be particularly keen on small-cap stocks and energy shares, which stand to benefit from potential Trump policies like tax cuts and regulatory easing. These sectors may offer profitable opportunities if such policies are implemented. Different sectors and stocks would respond uniquely to Trump's potential economic policies. Technology may gain from tax cuts, healthcare might see volatility, and private prison stocks like Geo Group could benefit, for example. However, it's important to note that these are speculative outcomes and all investments carry risks. Now let's consider fixed income markets. Increased government spending and a potentially hawkish Federal Reserve could drive Treasury yields up. This is not what happened during Trump's first term when yields fell, but that coincided with the Fed's monetary policy response to the COVID pandemic. However, this is speculative and the outcome could differ. Investors should be aware that market conditions can be unpredictable and past events do not guarantee future performance. Corporate bonds, particularly high yield, may see gains with a positive economic outlook. However, concerns about long-term fiscal health, given the fiscal deficit in the US and its increasing debt to GDP ratio, may push some investors towards shorter duration bonds. The MOVE index, a measure of bond market volatility, is anticipated to increase if Trump wins the election, reflecting investor uncertainty in fixed income markets. Next, we'll consider currency and commodity markets. Expectations of higher interest rates and economic growth may strengthen the US dollar. However, this may also result in increased currency volatility, especially for nations vulnerable to trade tariffs. Market volatility would be expected to rise, with both the VIX and MOVE indices reflecting heightened uncertainty in equities and bonds respectively. Industrial metals, particularly copper, could see a surge with anticipated infrastructure spending. Finally, let's consider the long term. When considering market movements related to political events, such as the Trump trade, it's important to take into account both long-term fundamentals and potential short-term impacts. While political actions can influence volatility, they're one of many factors that may affect stock prices. Over the longer term, the long-term upward trend is often more important. Investors should carefully evaluate all relevant factors as well as their investment goals and time horizon, or consider seeking the advice of a professional advisor. As always, don't forget to like this video if you found it helpful, and don't forget to subscribe to Trading 212's channel in order not to miss out on future videos.